Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Thursday, August 11th. It is 7:06 a.m. And as always, please run your player at 1.5x so you can move through the video quickly. Okay, this morning on the macro front, of course, being Thursday, it's jobless claims, but we've also got producer price index at 8:30 along with those unemployment numbers. So yesterday we had quite a positive reaction to the soft CPI numbers. Um, Again, remember, just one data point in the whole inflation series. I think the Fed is going to need a lot more information than one flat month. I think someone said yesterday if the inflation was zero the rest of the year, we'd still have a overall yearly CPI inflation at around 6.5%. So I don't see them slowing down. They may even have some. We got Jackson Hole coming up, which is not normally a time where they would do anything with rates, but they may have some hawkish talk around rates. And I expect them to keep going in September and the back half of the year, especially with the market, being strong. I think that gives them the green light to do what we said we thought they were going to do way back when. I think it gives them more leeway to do that. So anyhow, let's get into the charts and we'll see what we can see. I wanted to bring bonds back into focus. We haven't looked at those in quite a long time, but it's important to note that, remember, back in the spring, we had a lot of volatility in TLT. That was, remember, TLT falling means rates rising. And that caused a lot of turbulence over in the equity markets, especially in tech and bubble tech and all that stuff. And since early June, we've had a rally in TLT, which means rates have backed off. What I did was, in black here, drop in the Fibonacci sequence, and you can see that what we've done is put in a really nice bear flag, right? Tight range, coming right up to the 38% fib level, and there it is, backed off and has been respecting the bear flag uptrend line, right? So the point I wanted to make is, as we get to the upper ranges of this rally, or as the rally proceeds, I don't want to say there's an upper range because we don't know exactly, when it's going to stop, etc. We got to go by level to level, and as long as levels from above keep getting taken out, the rally proceeds. But I want you to, even if you're not a bond guy, or if you don't trade TLT, what I want you to do is put the chart in your mix and start becoming more cautious if you see this bear flag break. That would be, well, if this breaks, you'll know yields are rising. And rising yields are kryptonite in general to tech, especially bubble tech, Cathie Wood, all the super duper high valuation names that have gotten a big lift during this TLT rally. Well, when that rally when and if it fades, break out of this bear flag and start heading down, you're going to see a lot of that bubble tech take hits as well. So I think it would be a good thing to keep TLT in focus. The other thing I wanted to show you, we haven't talked about it in a while, is the VIX. Remember, all back through the spring, we were baffled. We were looking for a capitulation low. We never got it. VIX always topped out right at 36, 37. And now we've seen a steady decline through this rally. Now that we're down into where are we at? 1975 in that area. I would be watching for a couple things. I think if the rally proceeds and the VIX falls into 18, you can see that was support back here. Lot of traffic along this 18 line. So keep the VIX in focus as well. And remember, when it falls, it's a lot more stable and organized than when it spikes, right? This was remember that big 3-day sell-off in June? Actually caught us a little bit on that. And then early in the spring, you can see once it breaks to the upside, you gotta be really, really fast. And so we've got a nice trend line here. We know it's getting, pretty low, all things considered. So that's another yellow flag. Bitcoin, talked about this 24,000. Right now we're 24,500. I think if the risk on rally continues, you've got a great line here against 24,000, and I'm looking for 28,000 on Bitcoin. You can do the futures, you can do GBTC, you can use BITO, you can use Michael Saylor, you can use a lot of different proxies, but as long as Bitcoin holds above 24,000, I think with this void, I think it can make a flash move up to 28. We know NIMO is extended, still below 60, which is good, but if we make a push, remember the adage, don't fight NIMO. NAMO, little lower, 47. Keep that in mind going forward. As we get into the indexes, we had the big gap up yesterday. I think for traders in general, this is a really, really nice setup. Why? Because you've got two things. You've got a big line of support between 410 and 415, and you've got the 200 coming in right at 415 as well. Price above all the moving averages. You can see that the 8-day is back above the 20 and the 50. That happened back here. But you've got all the EMAs rising, positive slope. That's good. That's bullish. And you've got the 200 here acting as support. And I think, you can make this as simple as you want it, that as long as I'm above the 200, I'm good, right? As long as I'm above 415, no need to panic, right? You've got a gap above here, 423.16. Actually, it's a $4 gap. That's a nice gap. That's our next upside target. You may get a reaction here, of course, but hopefully that could fill, right? And then that would be another technical check mark for filling overhead gaps. And, it seemed like when we were down here at 365, you look at a gap 100 points higher and you scratch your head like, God, is it ever going to, when's it going to ever get up there to fill that gap? Well, it turned out sooner rather than later. So here we are. I'd be honestly a little bit surprised if price didn't at least come up and, get that technical check mark. If it reverses here at 430, 427, right in there, that area, I mean, it is what it is. But I think that is the next technical objective on SPY. And here you see that big support area. We had the gap up yesterday. Here, kind of off the scale, so I just put it in there of where that gap is. So keep that in mind today and, into tomorrow and next week. You could have a scenario where the market wobbles, comes back and fills the gap from yesterday and then reverses. But I think the cleanest look for bulls is to simply stay above the 200 at 415. Qs had the gap. I mean, most things gapped up yesterday on that risk on move, but notice still below the 200, which is right here at, I got it a little bit blocked. It's right at 326-ish, right in there. We've got a gap to fill. We've got a big downtrend line, and then we've got a big line of overhead resistance at 330. Notice here, rejection, rejection, rejection. If you go back in the chart, you'll find more support and resistance along that line. So really, on the Qs, for the bulls, gotta break above 330. Get above we got three major levels. We got the 200, we got the downtrend line, and we got major resistance at 330. So the Qs have a lot of work cut out for it there. And on the downside, I don't have the gap marked in. We'll see that on the 60-minute chart. But you don't want to see 317.35 fail to the downside. That would not give a very positive look. And so here's our gap from yesterday, 317 to 322. That's $5. That's a big gap. Here's the overhead gap that we just talked about that runs from 325 and a quarter up to 329.60. And then right in the middle of all this is the big downtrend line on the daily chart. And then we just talked about 330 as being key resistance on the high side. So I wouldn't be surprised if price made that move to go back up here and close that gap, that technical check mark we just talked about, and then run into trouble at the downtrend line and 330. So if I was long, if I took a chance yesterday and said, you know what, I think CPI is going to be good, I'm going to hold my position, and you got that big $5 pop, and you still got it, and then you got some kind of a gap fill today, that would be a prime place to head to the bank, because you got a 3-layer wall there as resistance. You may, if you're a tactical trader, you may want to try an objective short there against 330 to see if you get, a reaction back down. Or if you're still bullishly inclined, you take it off, you take your position off, you go to the bank, and then you wait. You patiently wait for that break above 330. Then you got some major bullish action. Why? You took out the 200, you took out the gap, you took out the downtrend line, you took out major resistance at 330. Then you got a massive line to shoot against on the long side. So I really think that's an area of importance that ought to be paramount in your mind. IWM really continues to lead the market up. I mean, if you look at this run percentage-wise, significantly ahead of large caps for sure. I didn't bother to change this pivot from yesterday. I think it's I really think it's basically the same thing, except now you're above the 200 again, and your first support is 194, and your target is up in a little zone between 198 and 199. You can see this largish volume over price bar here. I would view that as a resistance zone, and if price were able to pop 199, then I think you got a little bit of running room up towards 204. What would concern me on IWM is rolling over, losing the 200, losing the downtrend line, which now should be support, and then losing the 8-day. You know, if you saw all three of those things happen, you'd have to assume it's going to be coming back here to the 188 area. Here it is on the 60-minute chart. Just got the gap marked in here. We talked about the target being 198, 199. RSI and PPO remain solidly in their bullish regime. So I think IWM looks good at this point. Finally got a nice move on Meta. Big gap up out of the gate and right into this overhead gap. So now what you want to see today, if you were long or got long yesterday on this gap entry, sure, you could see a pullback into 176, the bottom of the gap, but you want that to hold. And then, of course, you want to see that gap fill up to 183. Keeping in mind, you do have a lower gap if there is, if price encounters some kind of problem or turbulence. Just keep in mind that that will eventually get filled as well. Apple just keeps cranking. Gap up. We're walking this tightrope here on this channel. I think as long as it holds the gap here at 167, you're fine. Of course, if it moves into the gap, you're going to go down to 165, probably fill it at the midpoint of the channel. But I took a look over on the daily chart, and your overhead objective on the long side is 172 and a half. So as long as price can hold these highs, hold the gap, that's what I'm looking for on Apple. And I think on the on the downside, we talked about filling this gap down to the midpoint of the channel. Of course, you know already, if you lose the midpoint of the channel, then that targets the bottom of the channel. And notice we haven't been down there in a long time. Down in here, we had a touch, almost touch here, and we've been working in the upper side of this channel for a long time. So in your trading in the next, or however many days, be respectful of that midpoint line, because I think it's going to be important if there's any kind of a down move. You want to see support come in like it did here to hold it in the upper half, because if you lose the midpoint, very high chance that it goes down to the bottom of the channel. Tesla, 885 is your pivot. I think above that, you can shoot back up to 915, and you've got a $10 gap here to 925 here, and then your prior highs at 935. Again, those are all the same numbers that we've been talking about for 6 months at least. On the downside, you notice this large volume over price bar coming in at 860, and I haven't done it, but you can also, with your mind's eye, see that you've got a rising trend line that will intersect 860 as well. So on the downside, I want to hold 860. I don't want this downtrend line to break or 860. Otherwise, that opens the door back down to 825 and the next large volume over price bar. And if you're new to the channel, first, thanks for spending some time with me. But secondly, through my work, you'll see that I find the volume over price profile to be very, very helpful in finding key areas of support and resistance. And you can see, you know, a large one here, a large one here, and a large one here. That basically does a lot of the work for you in terms of, you know, where are the key support. You know, here's prices above, so it's support again. I could easily, you know, draw that as a level there, you know, as a zone rather than a line as I've got it here. But if you can find these points on your chart, then you can fine tune it with the price action. It's not always going to lie exactly right where these bars are, but oftentimes you'll find it will. For instance, resistance right along that line, support, resistance, support, and now if it comes back down, it'll be support again. So most charting packages have that, and I think it would be helpful if you integrate that into your work. Microsoft, big gap up, $5, 282 to 287. That's what you got to watch on the downside today if things wobble. If you can get a breakout above 290, remember, well, let me finish this page. I'll go back to show you on the daily in a second. You've got an upper gap here, 292.50 to 296. I would have that marked on your chart. And you've got the lower gap as well. And this 290 couldn't be more important. Let's look at the daily chart. We've showed this many times. First of all, you got high volume over price resistance here, and you can see all these lines of rejection here right at 290. And it's not a coincidence that when price gapped up yesterday, it stopped on a dime at 290. So you can see how important that is on the daily chart. And if you're not in it and you get a break above 290, I would take that long and look for a gap fill and possibly even up to 305, which is the next super big level. I think it's a very objective trade to get long if price were to break out, simply because how important that line is, and it would be significant if price were to be able to do that. Amazon, another gap up. You see the line here right at what is that, 143.50. that's your pivot for today. If it can break above, I think it's got room to run up towards 149. Keep in mind that you've got a significant gap right here. What is that? What? My brain went dead. $3, $4, something like that. You don't want to see price drop below 141 here. Otherwise, you may get a gap fill. And so, I mean, there's a lot of air under this chart. You got gap, gap, big gap, gap, gap. A lot of gaps in this chart. Not sure why, but they're there, and they'll eventually get filled. Google 60-minute. In a lot of ways, this is like Microsoft. I'll show you why in a minute. But we had the big gap up yesterday. I would have that certainly marked or alarmed in your chart. I would just call it 118.50. There, that's where the support is. I've got it marked on the daily chart. I think your breakout level here is like 120.25, 120.50, something like that. But what happened yesterday was significant because this 118.50 has been a wall, and we talked about this big trading range that's $12 wide, and now we've broken above and held it. So from a technical perspective, as long as price holds 118.50, the door is open to 130. 12 added to 118 is 130. Now, that doesn't mean it's clear sailing. You got the 200 here, which will be resistance at, 122.60. And then you've got a big level of resistance here at 126. So, the door is open, but there'll be some obstacles in between. And if price were to, come up here, come back, and then fail, then that'll look like a failed breakout, right? So you got to watch this 118.50 like a hawk. Nice move yesterday in Netflix. We are right here on the cusp of this big $100 gap. We got the $40 measured move from 205 to 245. Amazing how that works. If you got long here, that's a big congratulations for that $40 move. Now, regardless of whether you're in or you're out, I would reset around 247.50. You get a break above, you got to take it long, whether if you're a technical trader, you got to take it long because you're in that big gap. Not saying you're going to get a $100 move in the next 3 weeks, but I wouldn't put it past it. If the rally continues, we're not the only people that have charts. And so if you get a gap entry, I would imagine a lot of people would be following that trade. And then you just have your tight stop below wherever your risk tolerance is. And, if you're a bear or we see the market start to fall apart and we see price begin to roll over here, this is the pivot. So below, you can technically be bearish and shoot on the short side for this thing to roll over, or wait for the breakout, and then you're in $100 upside gap. And then you just keep your fingers crossed to see how far it can go. And if you get a runner, you can, periodically roll your strikes higher, buy another week or two at a time, and regularly go to the bank. That's how I would play it. Semis, interesting setup here. Not going to spend a ton of time on it, but pretty dramatic rug pull, over the last few days. Bad reports from NVIDIA. Micron was out with junk guidance. AMD hasn't been doing anything. A lot of the other big names have sold off. So now, remember that common TA move. Breakdown, back test, fail. Not saying that's going to happen, but you've got a very objective setup for that to happen. Why? Because you've got a trend line here. It gapped down, found support, now has come up, possibly to fill this gap, tag the bottom of the trend line, and get rejected there. If you took this long here, I'd be careful right here. I'd be going to the bank. You can stay long if you want. But if you're not in, I would wait until price is back on the north side of this trend line, because you do not want to take this long right here just for the reasons that I just stated. That looks like a breakdown and a back test. And the thing that I've got in the back of my mind, semis are a risk on, risk off asset class. And if we want the rally to continue, I don't see another big risk on move with, if semis are rolling, waterfalling over. I want to see them either stabilize or move higher to support the cues and more of a risk on sentiment. I would say the same thing about Bitcoin. I want to see that thing go north and fill that gap, fill that void up to 28,000. That's a good sign of risk on behavior. And also ARK. I mean, Qs were up 3%, ARK was up 6%. This is your high, super high beta mover. Here on ARKF, I went and looked. You get a break above 21. Over on the daily chart, your target is 23. So if you're a nimble intraday trader, these ARK vehicles can be really hold your attention in a place where you can make outsized gains on these moves that are double what the broad market is doing. Of course, that goes both ways. You got to be right, and in a situation like this, if you weren't nimble and recognize that as a fake move, then you lost a lot of money real fast. So you got to be quick, but that's the name of the game intraday. And I think you got a great level right here at 21 to shoot against. Genomics, another one, up 7% yesterday. I think right here, the line you're looking at is 42 as a breakout level. If we go over to the daily chart, you can see this nice trend line that it's working against. We had a little pullback the other day against 38, which was support. And then you've got on the profile, you're going to have some resistance up in the 43.50 area. But above that, then you got the 200 and then the top end of value here. Notice that this is another value range from 43.50 to 50. And if you were to break back into the bottom side of an old value range, your target is the far side So ARK is something to pay attention to. Same here on the flagship fund. You see the prior low and the prior resistance. That makes 5250 really important on the ARK chart. We've got a nice rising trend. We've already broke the big downtrend line. So in my mind, a break above 5250 opens the door for a $5 move up to 5750. And then wrapping up with ARKW, kind of in no man's land here. I mean, really, it's between, we had the void here. If you got in, you know, if you took this long against support, you're sitting pretty. That might have been a hard one to take after a big red day, but if you did, then you're up here in the middle of the range. Let's see what this 60-minute is doing. Yeah, I would wait. I wouldn't do anything if you're not in it. I would wait for a breakout above, you know, 64, 64.50 on that. So let's see what jobless claims and producer prices do today. Keep watching your levels like a hawk. Watch your exposure. Put TLT on your radar for that potential bear flag breakdown. If rates start to go crazy to the upside, that's going to put, I would imagine that would bring the hammer down on bubble stocks and tech in general. So be aware of that. And please, I think this, as good as the rally has been, I think you are regularly, or what I want you to do is regularly go to the bank. Don't sit there being all complacent, you know, looking at all your paper profits. This is great. You know, I've made so much money the last 3 weeks. Continue to roll that up. It's not yours till it's in the bank. And there's no problem with staying long. You know, the current technicals support that. Know where your resistance is. And when you surpass it, that's a time to roll up. Go to the bank. Keep your overall exposure about the same. That way, when that surprise reversal comes, that it'll be all in the normal course of business, and you will be content knowing that you got the lion's share of the move already in the bank. And, you know, so you'll take your loss on the ones you have open, but it won't be as devastating as, you know, having all those deep in the money. So stay close to the money. You can stay long as far as the technicals support it, but please go to the bank. Hope you found the video helpful. I will keep you posted on setups that I see throughout the day and going forward. So thank you so much for spending time with me. If you're new to the channel, appreciate it. Hit the alarm bell and the subscribe button for more content heading your way. Also, over in the show notes, you'll see a link to the blog where you can drop in your email address. Takes all of 15 seconds, and then all of my content will be heading your way and in your email box. You won't have to hunt for it on social media or any of the other various locations. And you'll also get an invite to our trading room. We've had a couple new people join in the last day or so. It's good to see those guys. Always nice to have camaraderie and other eyeballs looking at the market for opportunities. That's what makes a room nice to have. So hope to see you there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.